All right, guys, let's go ahead and get into this nice little Thursday's price action and take a look at the recap. So, yeah, like and subscribe, sit back, get yourself ready, and enjoy the recap and analyzing some price action here and what kind of happened. So, you can see I'm actually here on Friday morning, so I kind of already reset a little bit on my charts before I got too crazy for the morning, though. Yeah, let's go. I wanted to kind of recap yesterday's stuff. So, I did move my fixed range volume profile over, so that's kind of in the way right now. To make it easier for you, I'll just turn off those two time frames. 4-hour and the 24-hour data, but you can see we have our key level set in the morning. As things started to shift, we were looking for it to either break out or break down. This is why we always wait for the candle closes. So we're sitting on the 15-minute chart. After we analyzed everything, we're looking for this to break out either on this purple line or this green line. In my case, you can code these any way you want, but we call them the breakout lines. So they're going to break down or break out. So they need to break something. So you can see that this is actually breaking here, but we didn't get to close above it. So that's why we wait for the two closes out. So otherwise, you're just kind of patient waiting. You can see it started to break down here. We got the two candle closes. From here, we're looking at going into the 15-minute. Now, the one thing I did not like about this was the Stochs were actually turning up during this time frame. So to me, that's a pretty strong red flag of a no. But like I said, when you're trading, you're kind of checking boxes when you're looking to get into a trade. So for me, I'm looking at, is RSI showing bearish, is the MACD showing bearish, and is the Stochs topped out? So in this case, I had the yes. I got the two candle closes. I'm below my breakout area, so that's a yes. But my Stochs gave me a no. So I had way more yeses than no. So definitely I'm gonna start looking at trade potential. Let's go ahead and go into that 5-minute during that time frame. Let's go back to that same time frame. You can see I have it marked here from that 15-minute chart. This candle. Now I'm going back into that same kind of mindset here because I want to look for an entry. So we're below the 21. We're below the 200. So that's a plus. That's bearish for us. So we're also having downwards pressure on the RSI. So that's bearish. Same with the MACD. It's kind of floating here. So it's kind of that neutral zone. It's not necessarily yes or no. And at the time, we're kind of showing flattening on our Stochs. So this could roll over and come back down. It could push up a little higher, but it also is giving me the signals that I'm looking for. So again, the checking them is yes, no. I have the below the 200, below 21, check mark, yes. On the RSI, check mark, yep, that's good to go. The MACD right now is a neutral. So right now I have two yeses, and I have a maybe, and then I kind of have a maybe here really in the Stochs too, because it's showing flattening. So right now I have yeses and two maybes. The nice thing is we are coming back up and testing right here on my breakout area. So what I'm looking for at this point, are you going to break above this and start to rebuild in this area, or are we going to break down? So for me, what I'm looking for is exactly that. So waiting here on that 15-minute, here we see that 5-minute, and then yes, where you got this close below. So this is where I'm looking at taking the entry. You kind of run the stop the way you decide. A lot of times I try to use my breakout areas as my stops, and then we're going to go ahead and run this out wherever it's going to go. Obviously, you can chart it from there. I like to draw it on out because where I like to get out is when it crosses back through this white line. So that was the setup. So I just kind of walked you through that price action, how we analyze a trade. So you're looking at checking the boxes. So we check the boxes. And if you're like, well, should I get in or get out? Well, if you have more no's on the check boxes, then you probably shouldn't get in. And if you have more yeses, well, then it's probably a good trade, probably could get into high probabilities. So that's why we're having these check and balances that we're constantly looking at. I've always talked about them, just explain a little bit different. Hopefully it's a little more simple, but that's what we're looking at doing. So then you turn around and you go up here and you look at this cross right here and say, okay, cool. We got the cross, so we're looking to get in out. It's a nice 3-to-1 trade, nice and easy. If you had targets that you were going for, you could have hit them on the way down. That's all up to you. I'm not going to dig into really pricing because I really want to just say, hey, when it crosses, that is the ease of getting out. Still a good trade. You got in when the movement was in the right direction, had high probability, it did play out, and you got out in a perfect area, quick and easy. Well, I wouldn't necessarily say quick, right? You got in at around 8:40, and you would have got out around 8:10 or so, 8:15. So yeah, a little bit of time sitting in the trade, but it was a nice low energy. Not too stressed. Where if you're getting into something like this, or it's high wick, high energy, you start to try to get in here and it breaks and comes right back up, and then you're worried that's going to break back up. That's why I'm showing you this, because really when you're getting into this, the probability of it to continue down is very high, and that is the goal that we're going after, is high probability. So that's kind of what I'm showing you, and really what my challenge is for you is to go back and analyze price action like I'm doing right now. And how do you analyze price actions? Create anchors in your charts. So like in my case, it's the session changes, opens and closes in the market. So for me, it's 6 6 a.m. Central Standard Time where I live, and that's why I mark this area on the chart, and then I can start. I have a timestamp now that I can work off of and be consistent every single day. I'm going to go back till tomorrow and do it and analyze price action. Go back the next day, mark the 6 o'clock and analyze price action. That's how you go back and you keep getting your eye trained to see this, so that way when it's happening in real time. So yesterday at 8:30, I was waiting for this. 8:35, 8:40, you knew that I was getting in the market right here, but I did not know what the rest of this was going to do at the time. But I knew what it needed to do, and I knew what I was going to do once it did it. So. And I also knew that if it went up and went the other way, I'm saying it crossed right here, great. But to point this out, this could have crossed way up here. This could have went on up and crossed right here. I would have got out right there. It could have started to cross right here. I would have got right out right here. It doesn't really matter. That's the whole point. That's what I'm going after there. Obviously, once you got out, it did start to trade flat, and you can see that it did try to start to rotate. Even these exponential moving averages, the 30 and the 50 here, you can see the 30 actually did cross and start showing that it wanted to rotate. Now, I do point this out, if you're in between these two moving averages, the 200 and the 21, that's neutral. So this was staying in a neutral state of showing it might reverse back to bullish, and it wasn't bearish. It was just kind of sitting here. Now we're back to bearish, but it's not a setup anymore. These aren't setups to be able to trade, because we need to go back out to that 15 and wait for that setup that I was talking about earlier. We use the 15 to enter and exit, or the 5 minutes, sorry, to enter and exit, not for the setup. We use the 15 for the setup. So analyzing, you can see why we get out, because it's just really kind of playing along. Now, it did set up here again. What I will point out is, you had 1,800 hours in military time to 6 o'clock. So somewhere right in here is the 6 o'clock hour, and then now you're trading on a new timestamp, if you will, into the evening and into the early morning of the following day. And you can see as this starts to play out, and it does the exact same kind of pattern. If we start to look into the 15-minute, right around the midnight, you can see that it did play out again. And then I've marked the 6 o'clock, and we're analyzing price action yet again. And right now on the 5 minute, just for a quick look, you're sitting right on the 21. Really, you're kind of playing with it. So you're in a neutral state, kind of sitting neutral to bearish right now. But it's not giving me, I need to get my lines and stuff on here so I can make those decisions. So that's about it. That was the price action for yesterday. It was a nice move down. It's hitting key levels that we have been set and talking about. So right here was at 85,400. I was showing you that. Now we're looking for it to come on down here into that 74,000 range. If it's going to get down there, we'll have to watch and see how things play out. That's how you trade. You find key levels, and as things start to show strength in these areas, then we can start looking for rebuilding. Right now we got a lot of trauma, if you will, to reclimb through, and really your 200 and your 21, if you go up into higher time frames, your 4 hour, we got to get above this 21 and 200 to get bullish. And same with the 1 hour. I know I'm zoomed out right now, but you can kind of just see the white line and the yellow line on there. If we're not above it, we're bearish. And short time frames aren't going to just flip the market. You can even go out in longer time frames on, say, the daily. And if you're really going to look at the daily, where's your 21 and your 200? They're both up here, so you're bearish on the daily. Weekly, you're under your 21, but you're above your 200, so you're in neutral state. The monthly now, we're technically in a neutral state, so we're not. It's not charting the 200 based on, because I don't have enough data on my chart, enough time on my chart to really chart it all. But it doesn't really matter. I'm underneath my 21. I know my 200 is down in this area, so basically I'm neutral, and I'm neutral on the weekly. So just kind of give you an idea. That's a quick way to read the market, so you can get a kind of a market settlement. And it's obviously going to stair stack up into the higher time frames as you get back above these. You can look at these though on the daily. Right now you can kind of see the 200 just kind of floating up here. We could start to see this roll over, but really I'm going to watch this 21 and see if we start to build kind of a flat price action. This 21 starts to get back under, and then we go almost neutral on the daily. That's also kind of showing a good sign that we could start showing that bottoming, if you will, and start to reverse. And it could just hold down there while this 200 starts to bleed back down, and then we start getting across, and then we're bullish and we run. Those are just way forward thinking. This is a daily chart. It's going to be a long time before we get out in that time frame, but you're going to see the same scenarios on the lower time frames. That's kind of what I'm pointing out here. So just food for thought for you as I know there's a lot of stress, a lot of fear in the market. Obviously, if you go out to here, you look at the fear and greed index, 11. It's rare that it's been down this low. It has gone down lower, but when you're down in here, this is on definitely extreme fear. So there's a lot of stress that's going on in the market right now. Don't get caught up into it. Find your key areas and why we're going to trade there, and stick to them. And then in the meantime, analyze what's going on right now. Take advantage of the current price action, because every single day we talk about be able to find opportunity. So I'll go ahead and let you guys go, and we'll see you in the next recap. Thank you, guys.